Do you know what the number one killer of all deals is? Well, besides time. At least when it comes to home purchases, the number one killer of all deals is actually debt to income ratios. Hey everybody, John Hudson here with the H&M Mortgage Group, and here's your chart of the week. So what have we got? This is home loan denial rates broken out by demographic, but overall, based across all races, 34.4% in fact, were declined due to debt to income ratios. Now, interestingly enough, 32% of all loan denials were due to credit history. So nonetheless, debt to income ratio is number one killer of all home purchase transactions. So that should really kind of come as no surprise, given we've got high sales prices, high interest rates, inflation, homeowners insurance is going up. I know, sounds kind of depressing, right? But what if there was a way that I told you that we can actually help some buyers with their debt to income ratios? Well, in fact, there is. So there's this really cool program that we've got access to called the Mortgage Credit Certificate. I know there's no sexy soundbite when talking about a federal income tax credit, but get this, it's there and it's real money that we're able to get back to consumers. So if a borrower is a first-time buyer, meaning they have not owned a primary residence in the last 3 years, or throw this one out there, or a qualified veteran, meaning they're just not active duty and they were honorably discharged, so like 99.99% of all veterans, or if they're buying a property in a targeted area, then guess what? They're going to be technically considered a first-time buyer. So now what is this tax credit that I'm talking about? Well, put this example, just think about this. If I had a $350,000 loan, and let's say that our borrowers were getting 5% down payment assistance along with that, by the way, that'd be $17,500 in down payment and closing cost assistance. But more importantly, so that borrower getting a mortgage credit certificate based on a $350,000 loan today, that would amount to roughly $3,900 in tax credit going back to the borrower. Now, why is that important? Because what I get to do is take that $3,900, divide it by 12, which is roughly $326 a month, and use that as qualifying income. Now, I see lots of loans that struggle getting an approve or denial based on around $20 a month. So imagine what a borrower or what a loan looks like if I can add $326 back to it. So anyway, hit me up. That's for more details. It's a really great program. And considering that debt to income ratios are the number one killer of home loans, we should all be looking at ways that we could help our borrowers. And for my agent friends, don't forget September 18th coming up is one of my favorite Platinum 50 events. It's the 15 by 15, and gosh, we hope to see you there. I've got a promo code that'll knock $5 off your ticket. DM me and I'll send it to you. Thanks a bunch. Bye-bye.